Hey, good afternoon. This is Bill Curtis from Creating Wealth from Life. Today, we're going to talk about the power of compound interest. It's something that Albert Einstein called the eighth wonder of the world. So I'm going to have a few questions for you, and I want to see what your answers will be. So let me just share my screen here for a second. And I have a question for you. If you had money that was earning 4%, would it make sense to leave it where it was at and use it as collateral and borrow against it, but pay 6%? Now, I know you probably don't know where you can borrow money at 4% tax-free. I do. And I can show you how to do this. So let's redress the question here. If you had money and it was earning 4% tax-free, would it make sense to leave it where it was at, use it as collateral, and borrow against it at 6%? That's my question. Usually, when I ask it of my clients, what I hear is, well, that doesn't make sense because 4% is less than 6%. I'm going to be losing 2%. Well, let's take a look. What actually makes more sense? If you had $30,000, whether you acquired it over several years or you had it and you put it in an account and it was earning 4% interest, and you left it there for 5 years, at the end of 5 years, your $30,000 would grow to over $36,000. Actually, it would grow to $36,499. But now you've used this money as collateral and you've taken a loan of $30,000. And you're going to have to make payments at 6% interest for 5 years. At the end of 5 years, you would have made payments on the automobile totaling $34,799. However, you would have earned $36,499. You would have made $1,700 simply through the power of compound interest. A lot of times people say to me, well, how is this possible? How could I make more money when I'm paying out 6% and I'm only making 4%? This is the power of compound interest. That $30,000 at the end of the first year is going to grow, and the money is going to grow on an ever increasing basis daily, and it's compounding in your favor. So by the end of the first year, you'll have $31,200 in your account. The very next year, the second year, you're going to be earning 4% on a higher amount. So by the end of the second year, you're going to have $32,448. The third year, your money will have grown to $33,746. The fourth year, it'll have grown to over $35,000. It'll be $35,096. And by the end of the fifth year, you'll have your $36,499. Well, let's look at the other side of the coin. You're going to be paying on an ever decreasing balance, an amortized amount. And every time you make a payment, you're paying on an ever decreasing amount. So at the end of the first year, you'd have $24,696 remaining. By the end of the second year, you'd have $19,065. By the third year, you'd have a little over $13,000. Then the fourth year, you'd still owe $6,739. And obviously, the final year, you'd have it completely paid off. And you would have earned $1,700 simply by the power of compound interest, leaving your money where it's already at, having it work for you twice. It's going to be earning interest, and you've also used your money, in this case, to purchase an automobile. Albert Einstein, this is his quote. He's credited with this statement: compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. If you're currently paying it to somebody else, click on the link below, subscribe to our channel, watch our videos. When you've learned something that you want to take advantage of, just reach out and we'll be able to give you some additional information. If you're interested in seeing how to do this, just send us an email or give us a call or send us a text. We'll be happy to talk to you. You have a good day. My name is Bill Curtis.